Hey, what's up, Infosecaddicts? Joe McRae here. Man, it was on and popping. Did you guys see what happened with GameStop?
GameStop, a struggling video game retailer, suddenly became the most talked about stock on Wall Street.
I got some thoughts on it. I got no way to prove it. No, I don't have any inside information, but I have a suspicion. And the suspicion was the way that the event happened.
But then this morning, something huge happened, and that's this trading app, Robinhood, just halted anyone's ability to buy GameStop, to buy AMC movie theaters, to buy Nokia stock.
By the way, GameStop surged again today after trading was resumed following freezes by apps like Robinhood and many others.
If you look at what was going on, you had a series of people who were like, man, I know that GameStop is a stock that, in terms of their business model, is going to diminish over time. So what people decided was they said, listen, games are getting increasingly more online focused. There's not a whole lot of benefit as the years go on to going and buying console-based games as CDs, buying them and then selling them back. You know, when everyone's going to subscription-based online models. So from a business model perspective, a lot of large-scale investors were betting that GameStop was going to diminish in value because of that. Smart bet. So you had some hedge fund guys who bet that GameStop stock would fall in price.
Now it's being framed by many as a full-fledged populist uprising against financial power centers. It is raising concerns about dangerous pump and dump schemes like that which was chronicled in the 2013 film, The Wolf of Wall Street.
I think you could actually make a lot of money, and I have friends that are making a ton of money playing these hot, Reddit stocks that are just being pumped up. It's like a modified pump and dump, because at the end of the day, it will most certainly go back down because it's not trading based on any rational fundamental value.
A few years ago, there was a kind of attack that was based on cross-site request forgery. The attack was called a pump and dump. So the pump and dump attack, what happens is you have control of somebody else's account, and via this person's account, you execute trades on their behalf. If you get enough people whose trades that you can execute on their behalf, then you can drive the price of a stock up. So you buy it low, you send your spear phishing email, people click that link, you now have the ability to impersonate them because you steal their session ID and execute a series of actions in the website as them. So let's say you did that and you decided to buy GameStop stock, and hypothetically, you were to do this through the Robinhood app. I'm not saying that I know that that's possible, but let's just really think about it, right? So you realize that this is really moving early in the morning, and you and your friends go, man, we can send out some spear phishing emails, we can send out some spear phishing text messages, we can make some additional posts on Reddit, and we can drive people who, through their Robinhood app, through their Cash App, through these various investment apps, robo-investment platforms, allow them to buy stock. So we can coerce these users into clicking on, giving us access to their account, and us executing these trades on their behalf.
Behind GameStop's wild ride are scores of everyday investors from all over the country, disrupting Wall Street's chokehold on the markets. Many Reddit users intentionally banding together to bet on the struggling video game retailer, driving up its sagging stock price.
Now, as these trades start to increase the volatility, that's what that's called, the price value goes up. So in a pump and dump, people attack brokerage firms traditionally. My theory, and the reason why Robinhood seems to be in the news, my theory is somebody attacked Robinhood. And the reason Robinhood had to shut that stuff down, a lot of people are claiming it's their fiduciary responsibility. They're not wanting to get in trouble with the SEC based on collusion-based investing, which does have legal merit. Collusion-based vesting is a derivative of insider trading. So there's legal merit there.
You don't control the listing venue for GameStop. The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, It should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
I think it'd be really difficult to prove. I think it would be really, really, really difficult to prove. But why is all the focus on Robinhood? Robinhood said they're not going to allow these investments. Robinhood just this morning stopped letting people buy crypto. Sounds to me like they got owned. I got no way of knowing. I got no inside information. I'm just a security guy who's theorizing here. If you know something about it and I'm dead wrong, please tell me, please correct me. I don't want to be someone spreading false information. If you want to communicate with me privately, I'll put my PGP keys out there, GPT keys out there, if anybody wants to talk with me privately about it. But if you've got some info, my suspicion is it was a bad hack. It's the only thing that makes sense. All right, guys, you guys take care.